Hello and welcome to the third quarter 2023 Home-Based Care Earnings Call Report. My name is Cory Mertz. I'm the managing partner here at Mertz Taggart. Let's get into it. Let's start with Addus. Addus had a strong third quarter. Revenue and EBITDA grew significantly compared to previous quarters. Revenue came in right around $270 million. So if you annualize that, they're a little bit north of $1 billion. And EBITDA came in right around $28 million, or about 11%, which is pretty strong for home-based care. In both cases, they beat the street number, which gave the stock a little bit of a bump. Stock was trading right around $79 a share before they announced earnings, and have since climbed up to right around $90. So the analysts liked what they heard from Addus, and the stock continues to trade right around 15 times EBITDA. The personal care segment continues to drive the growth, which was helped by some much overdue pay raises from some of the states that they operate in. Now, interestingly, on the home health side, revenue declined due to management's choice to intentionally, quote, reduce admissions from payers that do not currently reimburse us adequate rates to cover our cost. This is a more common message that we're hearing from the large public companies and even the large PE-owned strategics directly at Medicare Advantage plans who continue to pay significantly below traditional Medicare fee-for-service rates. Addus was quiet on the M&A front in the third quarter. Okay, let's talk about the Pennant Group. Like Addus, Pennant had a strong third quarter. They beat the street in both revenue and earnings. Analysts liked what they heard. Stock was trading just around $11 a share right before earnings were announced, and then since then climbed to about $14 before retreating back to about $13.50. So about a 25% gain since they announced. Stock is currently trading right around 23 times EBITDA, so it's a very healthy multiple for the Pennant Group. The company experienced growth in all three of its service lines: home health, hospice, and senior living. On the M&A front, I would say Pennant has been consistently active. They've completed 5 transactions since May. Okay, let's talk about Aveanna. Now, this might be the story of the quarter. Aveanna is starting to hit its stride, and Wall Street is rewarding them. So, the company increased revenue by about 8%, but significantly improved their bottom line, and that's going to continue going forward. And how did they do that? Well, number one, if you look at the private duty nursing side, which makes up about 80% of their revenue, they've been able to execute on a legislative strategy that allowed them to secure better rates in 19 different states. Those rate increases have gone into effect, much overdue rate increases, I'll add, in the second half of 2023. So they're just starting to materialize right now. So as we've heard from some of the other providers, Aveanna is really focusing on growing the episodic Medicare revenue and having some success doing so. So they've grown their episodic revenue from about 63% to 75% of their total Medicare revenue. Aveanna shareholders have been rewarded, with the stock moving from about $1.20 pre-earnings call to about $2.70 today. So for those doing the math at home, it's about 125% return over the last month and a half. Aveanna hasn't been in any position to do M&A, but they're certainly making progress. So congratulations to the management team at Aveanna. Finally, let's talk about Enhabit. Enhabit has had its struggles over the past year or so, but I think analysts are starting to see some light at the end of the tunnel. In August, Enhabit announced they were entering a strategic review process. And as our friends at Jefferies stated, all eyes are on the for sale sign. So they're looking at a potential sale, and we'll be tracking that process closely, over the next 6 to 9 months. Don't have any inside information to share with you all, and even if I did, I wouldn't be able to do it. But in the meantime, the stock rose on the earnings call. They were trading around $7.40 right before the earnings release, and have since trended up to about $11. So about a 50% increase in the stock price. On the M&A front, Enhabit's been quiet, and I don't expect that to change anytime soon. They're working on amending their credit agreement to avoid tripping their leverage ratio debt covenant. So I don't expect any transactions in the near future for Enhabit. Enhabit continues to trade in the mid-teens, 14 times EBITDA, which is not bad. So in summary, mostly positive results coming from the home-based care public companies. Addus and Aveanna both reported significant growth in revenue and EBITDA, driven by improved labor markets and higher reimbursement rates. The Pennant Group also saw growth across its service line, bolstered by a strong acquisition strategy. Enhabit faced challenges as a standalone company with decreased revenue and EBITDA impacted by payer mix changes and regulatory uncertainties. Thank you for listening. We'll talk to you next quarter.